Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been a massive week. We've touched $14,000 US Bitcoin. It's been 493 days, but we got there. We're going to talk about whether or not we're going to stay there. We've got so much macro news to get through. It's election week. All the markets are moving. They're on a knife's edge waiting for that stimulus, which we didn't get. I've got a little bit of housekeeping to get through first. I do just want to welcome a few hundred new subscribers again this week. We're getting very close to that 100,000 mark, which I am looking forward to doing something special with all of you to celebrate that because you've all been a big part of it. Some fantastic monthly videos this week. I know you guys are enjoying learning about mining, all the latest in Ethereum and DeFi. And this was a really important one about a big theme, a thesis that I don't see anyone else talking about at the moment. And that is how countries are going to trade the commodities, the real goods, that intrinsic versus extrinsic value in a world of fiat money. So please watch that one if you haven't already. Now, I also want to thank you because the support we've got since we got rid of all the ads has been overwhelming. It's free to click that like button. Please leave a comment, leave a dad joke, whatever you like to get that engagement going for that algo. We always support the decentralized platforms as well. So we're uploading to Library, who have been, a great supporter of the whole community whenever YouTube take down videos, for example. So look, thanks to everyone that is smashing that like button there. I also want to just give a big thank you to the community who also thanked my wife. But look, we've been head down, bum up for 3 years now, and particularly just when you thought you couldn't work any longer hours, getting this platform out in a world of COVID and working from home. Look, Ben has done a fantastic job. He leaves me to create this content for you guys and research. He's really become the manager and the head honcho of the business. We're hiring again. I don't want to say too much publicly because we get overwhelmed with CVs. But look, we're up to 22 staff now. Very hardworking bees in that little hive behind the scenes that you guys don't often see. So look, this message was just a bit of a tearjerker for our community to, I guess, get that thanks and recognition for the significant others in all our lives when we're going through tough times or building a business. And I certainly plan on trying to take some more time off in the coming years and spend that with family. But that's what you work hard for in the short term. And I really do think the next couple of years is a chance to build something special and create wealth as well. You guys see how fast this crypto community is growing. I'm not just saying that because I'm in it. Seeing it firsthand, you guys see it as well. I mean, just look at how much news we have to get through each week. So big thanks to Jem and big thanks to the community for supporting her with that nice message as well. Now, we've finally got our platform out. We've onboarded thousands of people. We've had hundreds sign up who weren't fans of Facebook. So that is all working pretty smoothly. If you have had issues, reach out to the support staff. All the links to do that are on the website. Be patient. They will get to you. As I said, there's more than 20 of them now. They do have to sleep. They do have to have some time off over weekends. But we're getting through all those messages. It's working really smoothly. I can't thank you guys enough again for the kind messages coming in about how it's good value for money. I'm always hesitant setting the prices for all the different products that we have, but I want to feel like we're giving you value, and we're going to continue to expand that product range. This is another one of the new reports that we'll be doing with sentiment and Glassnode, so professional psychology, sentiment, and on-chain data research. So you'll get those reports as well. Look, head over, have a play around with it, have a look. I'll do a proper walkthrough soon. But the main difference is it's all really organized, because I know everyone was saying, hey, it's hard to find. We've got products where we want to save you time with those daily snapshots, headline analysis, the macro research, gold, silver, as well as the crypto research, the spotlight reports. We want to build out the biggest library in the world of individual crypto projects, so you can go there and get unbiased information from our team of researchers. Our live monthly Q&A. And before the next bull run kicks off, which it's just about to, we're putting the final touches on our beginners course. And as always, our knowledge center, that is all still free. So, millions of views, thousands of hours of content, all that stuff I've done over the years, that's all still free for anyone that's getting into crypto, but particularly we're broadening that out to finance, economics, all areas of education for your journey with us. Last one here, a big thanks to our partners, Troy and Kyle. They've been very active in our community, helping you with their style of TA, which is very different to mine. They've got a new website. They're running another big course. So if you are interested in trading, I've got my style and a few things that I teach, but these guys have just got all these. Look how thorough it is. They're doing these. They're running the sessions a couple of nights a week. You can do it at your own pace. This is very, very thorough, and I can tell you that I'm still learning stuff off these two, which I love as well. So there's a link for that down below. All right. Now, having said all of that, Nuggets News as a media channel, it's kind of becoming a bit of a rarity, and this has been very topical. I know some of you don't like talking about politics, but Kevin Rudd broke the record for the most e-signatures on a petition to try and get this Murdoch Media Royal Commission. So look, Royal Commissions haven't been that successful in bringing about change in Australia, you'd probably say, but people are seeing it as a problem. So independent media like the Juice Media, those guys love to take the piss, as we say in Australia. Look, I really think that these platforms are so important, and the decentralized platforms like Library are going to become more important going forward. That's why blockchain decentralization, it's more than just this fad. And I think people are starting to see these things happen in the real world, and they're now starting to join the dots about why we need some of these other protocols. So the local economic news now. JobKeeper should not be funding executive bonuses. You'd think that's stating the obvious, but time and time again in America, we just see where this money, robs Peter to pay Paul, whether it's dividends, bonuses, whatever. So we need to clearly draw those distinctions, as the ATO has been highlighting here. And we know that Q3, that big roll-off is coming in Australia in terms of who gets what. Now, this is a must-watch show from the guys over at the CEC report, Robbie Barwick and the team. I won't give away too much because I really want to encourage you to watch this session here with the senators calling out our regulators here and saying, well, who is in charge of the banks? What about these crypto companies that are getting debanked? Where are they meant to go? And this is becoming a real problem. And no one wants to take responsibility here. So calling out a bit of the BS at the moment, and it was actually really refreshing to see. So you're going to enjoy that one. He puts some hard questions to the RBA, and you very rarely see these central bankers get asked tough questions. So look, I might link this one as well down below. Please head over and watch it. I'm going to get Robbie on the show for an interview, because I think you're just going to really enjoy what he's been talking about lately. Okay, so do the big banks think a large number of Aussies are going to default on their mortgages in the coming months? They've been raising those capital levels. The RBA, our central bank, have pledged more money is coming. ANZ announced that they've got, was it 42% fall in profit? And funnily enough, we've started to see these things that I predicted that people thought I was crazy a couple of years ago, that the RBA have joined everyone else. It's down to 0%. They're probably going to cut rates again, even though they've got nothing really to work with. They don't want to go negative. So that's when they're going to have to fire up these money printers and start to debase our currency. And they're putting out these propaganda videos about, what is inflation on social media. So it's kind of a little bit cringy. You've seen the Fed do it. You've seen the ECB do it. And now the RBA is going down this playbook as well. So inflation disappointed, a little bit lower than we hoped for. This is what we're seeing all around the globe, where despite having interest rates really low and printing this money and giving it all to the banks and telling them to lend, telling people not to save, get out there and spend, it's just not happening. So another low inflation number is setting this scene for QE, and the RBA are probably going to do what the Fed and others have done, and they're going to talk about how they want to run inflation hot. And remember, we've already had those the cost of living numbers that are fairly high compared to our wage growth, which is just not going anywhere. I just mentioned that ANZ profit slump, blaming COVID, but there was all these structural problems beforehand, as you know. But one thing that's really interesting with this, again, something that Robbie talked about, was the links to Australia Post. And the ANZ CEO Shane Elliott's coming out and saying that, look, RBA, this QE, it's not really going to change anything because the banks don't like these low interest rates. They get hurt by them and they actually get killed by negative interest rates like we've seen in Europe. Now, sure enough, our mate Chris Joy comes out and tells it how it is, saying that he's just wrong about the RBA and QE. He's obviously a big fan of all this. But one thing that I just wanted to mention there, I haven't got the story there for you. So I wanted to mention the thing that Robbie speaks about in this video, if we've got it towards the end here, how the Ozpost news here. Why on earth have we got a CEO of Ozpost being singled out by a Prime Minister when we've had the Royal Commission and aged care, everything else that's happened in this country, and yet he's, almost really made an example of Christine Holgate here for getting some watches. Now, for those of you that don't know, Ozpost have been doing a lot more for the banks. They were kind of doing it for free almost, and then the banks were forced to pay a little bit more, but ANZ didn't want to. So there's a whole story there that I'll flesh that out with Robbie. But things are going on behind the scenes in government, in the CEOs, the central bank, retail banks. There's never been a more interesting time in global politics, but in Australia, in our own backyard as well. So I'm really looking forward to seeing what happens if we fire up these money printers. Now, BP have pulled the plug on an Aussie refinery, Asian competition. These things are continuing to bite Australia. Unfortunately, we just don't have that manufacturing base. I'd love to get that back and get really competitive there. I think we're going to have to with the way supply chains are going. But one thing that is good news, unlike a lot of other countries, is Australia recorded this first day of 0 cases of community transmission since back in June. 4 months ago. So other countries are hurting. This is Belgium, population half of ours. Cases yesterday were 21,000. So this is the equivalent of the US having 600,000 cases a day. I think in a lot of people's minds, it's not out their window, and so it's gone. But Boris just announces he puts England, the UK, back into this strict, hard lockdown for a month. People are already taking to the streets. They're unhappy. I would be too. And as I spoke about at the very beginning of all this, you need to go hard early. Unfortunately, it's this half measures, and I don't think it's the right thing to do to be going back into lockdown. These are the hospitalizations. This is what we need to keep an eye on. The US had that big decline, so did Europe, but now it's starting to trend up again. And we need to make sure that those that are at risk aren't getting it. But we need to let these healthy people go about their lives with the masks, with the other protections, because we can balance this, we can manage this. We do not want to crush our economy. So this UK study is finding that the antibodies are waning after a few months. So this is more like, I guess you can think of it as the flu, for example, where you don't have those antibodies each season. So this kind of makes the vaccines a lot harder to target. Nurses, 36% of all COVID healthcare workers, and then they're the ones that are on the front line and probably getting the most exposure. So I won't get into it too much, but this tells us a little bit about things like viral load, and it plays into that theory about it being more of a sort of autoimmune thing. So if you're getting more and more exposed, it's more and more likely to upset your immune system and make you unwell. So I think we're going to find out there's that genetic component, there's the overweight, obese, all the usual stuff. If you're immunosuppressed, diabetic, anything that sort of compromises your immune system a little bit, you're more likely to get this, as well as healthcare workers. So when we're hearing about these young, fit doctors that are getting it, I think it's because they're on the front line getting a big viral load. So this is actually a good thing for those of us in the community. If we're being really sensible and doing everything right, we can, at worst, get a low viral load. And that would be a big win for the economy if we can all be sensible and get things going again. But that's the sort of conversation that's nowhere to be seen with our leaders. And that's what disappoints me now that we've got enough data out to be having these conversations. And I have changed my mind because of how worried I was at the start when we were seeing things like hospitals overflowing in New York and Italy. The healthcare professional in you says, we need to get a grip and see what's happening. better to be safe than sorry. So look, I know everyone doesn't agree with all that, but that's kind of my 2 cents, and everyone's welcome to their own opinion. So charting the global economy and economic growth here, you'll read in the headlines that the US bounced back 33%. That's a drawn out estimate, an annualized estimate from the quarter where they've just bounced back from the previous negative quarter. But the thing that's really interesting for me here was seeing China and the rest of the world is only got back to maybe this 80% growth, whereas China's nearly back up towards 100% of where they were. And they are hopefully going to help Australia pull us out of it, but not if they keep slapping all those tariffs and warnings and telling their citizens and businesses not to do trade with us anymore. Over to the US, the velocity of money, can't quite see this behind me, guys, but it's right down, getting towards less than 1%. Now, CPI in the US is down as well, those inflation numbers, but it's that turnover of money, the velocity of money that's just so important, and we are not getting that in the US at all. So the dollar is changing hands at the slowest pace ever, and this ties into that big macro understanding of how the monetary system works, which goes against what central bankers and economists are taught. So they're there printing this money and thinking, well, why aren't we getting economic growth and inflation? Because it's not moving around at all. And that's if it even gets into the economy, because at the moment it's just sitting in the reserves of the banks. And when we get into the crypto news, that's why they're working so hard on these other digital currencies that they can give directly to people through phone apps. So Americans are planning to scale back their spending this year. These surveys that show they're going to be spending less than last year. A lot of the good retail spending that we saw was for things like food stockpiling. And we've seen these, the pantry and the hoarding again, but also the fact that people have got everything that they need, and so that other spending that's been brought forward is now not there. So that's kind of starting to creep lower at a time when the price of food has been going up clearly, not just in America, a lot of countries. So these are the emergency jobless claims, and they've soared to a record high. So you might hear about how the jobless claims are ticking lower and continuing claims are rolling off, but they've been picked up by these emergency pandemic unemployment claims and getting those benefits as well. So it's not as pretty as the headlines do suggest. The ECB have hinted at more stimulus in December. They are in a very, very awkward position where their banks are hurting a lot more than the US or Australia, and they're facing negative interest rates for the foreseeable future. And in that scenario, your banks just continue to bleed out. So we've got these bond defaults, 99% losses in a new era of US bankruptcies, but that's just the US. Think about all the bankruptcies in all these other European countries. They're all interconnected. They're all levered up. They've all got these derivatives that they've sold to each other. So this is where the central banks are going to have to step in, and the next wave of printing to save everyone that they're going to have to do is probably going to be in the tens of trillions rather than the trillions that we just saw. Unfortunately, Washington didn't get that stimulus through, so the Fed are kind of running out of things that they can do. Jerome Powell's on the cover of, was it Forbes magazine? There's just this media narrative of trying to make the Fed look omnipotent and all-powerful to the public, rolling him out. Maybe he's going to be on 60 Minutes again, but trying to get that confidence game going, because I think they know what lies ahead, and now they're really disappointed that governments didn't get together and spend. They're fearful of inflation. That is, with all the debt, they do not want the economy and the amount of money in circulation, the size going down, because it's a lot hard to pay off $26 trillion when the pool of money is now smaller, okay? So it's good for a lot of other people. The cost of goods and everything goes down for us. The concentration of wealth. This is the 2 decades, as Lynn says here, who I'm interviewing in a couple of weeks. This is the 2 decades where wealth inequality and concentration went down, because the wealthiest 0.1% with all the assets, all those assets go down. And imagine in Australia, if property prices were allowed to go down, all the people that have got 5 houses negatively geared, it got to a point where 5 average families could afford one house each, rather than the one wealthy guy that's fully levered up having five. And it's almost like literally that rent seeking to taking the money and driving the gap off the other five families. Wells Fargo, they're looking to walk away from all their student loans. Now, maybe if Biden gets in, they're talking about possibly a lot of debt forgiveness. But these are all the things that the banks have on their books that they've got to try and get rid of now. ECB, Panetta saying, hey, do anything to Europe, to the governments, but they've got their hands tied. They aren't in the position where they have their own currencies. When we look at these big industries like oil, we've touched on this a lot in recent months. No stimulus there, so oil crashed hard this week. The hardest we've seen since back when it fell off that cliff in March. There's no production cuts. OPEC's less relevant than it is now, so they've just basically got to sit and wait for a recovery, and that's going to mean that a lot of the smaller ones go bust. For the individual countries that can't afford to cut output either, 1 million barrels a day, they've got to keep putting this out to pay the bills, whereas you'd hope, and everyone would hope that, hey, can we all take a bit of a cut to try and get the price of oil up? It's the opposite. They've got to keep pumping more than ever, as do a lot of countries, because otherwise they can't pay their bills. And this is where the whole US dollar comes into this conversation again, and the US dollar started to strengthen this week. Colombian families used to eat 3 meals a day, now going hungry. We see it in Venezuela, Argentina, one by one. It's those currencies that are just getting smashed. People can't afford food. Exxon have cut 40,000 jobs. A recession, a depression means less oil. But hey, Exxon have paid a dividend. This is the first time that they haven't increased their dividend since 1982. That is a crazy, crazy record. But either way, it's nice just to get a dividend at the moment with everyone getting bailouts. Mergers and acquisitions. So at the bottom of the cycle, we see all these companies going bust and a lot of mergers and acquisitions. I've spoken about this time and time again, where in the big picture scheme of things, commodities are heading towards some sort of cycle low compared to a lot of other things. The intrinsic value argument we spoke about. E-commerce might offer a bit of a second life for oil. The logistics have changed slightly, but with everyone shopping online, it is going to mean a lot of delivery still. So look, oil is in everything. It's not going away anytime soon. But we've got to be aware and conscious that a lot of money is going into these renewables, clean, green, that theme, okay? So you can joke about it, whether or not it's woke, or whether or not it's even realistic to think we're going to get there. But that is what's happening at the moment with those funds. And it's a kind of a feel-good story, I guess, for the politicians to get elected as well. Household debt, service payments as a percent of disposable income. This chart I wanted to show you because it's a little bit misleading. We can see that it's been going down since 2007 in the US from 13 to 8 or 9, but it's actually very misleading because it takes an average, and the top 1% have got so much more wealthy. So we actually have a look at house prices compared to disposable income. We can see that there's been a massive divergence there since 2011, where it actually got the other way around, inverted slightly there. And it's the same problem in Australia. Here we can see those ratios a little bit better. Half of the population spend more of their income. Is this, have we got a percentage here? I think you guys get the picture. We've spoken about it a lot in our documentary and what happens in Australia. The low income earners that are just putting more and more of their paycheck towards paying a mortgage rather than other things, going out for breakfast, supporting that small cafe, going on a holiday. Instead of money going into real things in the real economy and circulating, it's just constantly going back into the banks that got to create that money, that loan, out of thin air. In terms of real estate and those unaffordable houses, it's the same with the office space, the commercial that we talk about. So 76% of these CEOs are planning to reduce that office space. How quickly can we go from a shortage to a glut? We're seeing that in places like San Francisco. These are the trends, the cities that gained and lost. Look at New York, Brooklyn, Chicago. people are just leaving in droves. This is the cost and how much it's fallen. So it's down 20% year on year in San Francisco, 15% New York for these one bedrooms. They need to be serviced as well. So I think that bleeding can definitely continue. I mean, will it even bounce back? Will people never want to go there to the same extent that they did now that they can work from home? Maybe it's a different way of life. Maybe it's this social unrest. And this is what's being prepared for, bracing for it with election week. So you'll see retailers that are boarding up the shops. Some streets are being closed. Social media networks. It is just never been a more interesting time to be alive. And hey, who knows what the headlines are going to be this time next week when I'm reading them out to you. But Trump has had a little bit of a comeback this week. The Biden allegations, whether that plays into it or not, it depends what channel you watch, I guess. But look, he was the underdog in 2016. I think everyone kind of knows him now. It's a little bit of a different scenario, but I think it's a lot more even than people think. So I'm going to be watching very keenly. So the Fed did make one move, and I think this is a good one. So they are extending these Main Street programs and decreasing the minimum from 250,000 to 100,000, the minimum borrowing size. So remember how I was saying that small businesses that have got uncertainty about the future, they're not really game to go out there and borrow $250,000. Are they really going to be game to borrow this as well? I think they need like a more of a free relief package or something like that. Tax cuts, these sort of, hey, you can borrow money from us, that's not enough. It's not a carrot that they're really interested in that's being dangled in front of them. Now the Fed, again, funnily enough, working with BlackRock, and BlackRock have seen these changes to small businesses. Maybe they know there's another program coming, and BlackRock are defying the odds and launching this small cap value ETF. And we know that the big caps are dominating, so maybe relatively, hey, small caps are attractive. Why not launch an ETF with all the passive investing that's going on these days? We can see the Facebook, Amazons, Netflix, Googles. This is where all the big revenue has been. But that has changed. All that momentum coming from the Charles Schwabs, Robinhoods, it's kind of ironic that they're now the ones that are cutting jobs in these mergers and acquisitions in different sectors. Robinhood CEO admitting here in this interview that it's because of the Fed's stimulus paychecks that their business has boomed and that the stocks have gone up. And remember how Jerome Powell says that there's no relationship there and the Fed don't drive any of that? The stock market has now become a derivative of the options market itself. So this is the size, total options market in volume has now surpassed the US stock market. And remember how options, if you've traded options, you'll know most of them are in lots of 100. So it's kind of a leveraged play. The way that the gamma works as well, it drives momentum both ways. So not only do we have this leverage and investor credit with people borrowing their shares and getting these margin accounts, it's at the record levels again, these negative balances. So people have borrowed up and leveraged up. And now we've got all the options in top of that at a time when the insiders continue to sell. So this is showing you almost perfectly that the insiders sold the top. The smart people, the CEOs, they're getting out. Selling pressure in the US stocks is becoming more extreme more often. So we're seeing under that surface, there is a lot happening here. And tech, all of a sudden, it's out of favor. It doesn't have this halo. Most ETF cash pooled in 17 months. The S&P weekly changes, down 6% for the week. This is the biggest fall since things started to fall off that cliff back in February and March. So it's all good until it's not. And as I said, it works the other way. We've been talking about these antitrust and being dragged in front of regulators. So Apple's booming service businesses could actually take a hit because of what's going with Google there. And there's so much overlap with the data and the sharing. Apple actually have lost $450 billion in market cap value because of how bad these iPhone sales are going and the projected growth. Now, Huawei in China are hurting as well. There's the tech war there. They actually found a way to get their hands on some chips, or they're going to start to try and manufacture those to be less reliant on the US as well. Now, in China, there's no shortage of money still. This is the world's biggest ever IPO from Jack Ma and Ant Group, so 284 times oversubscribed, as Chinese banks are giving retail investors 33 times margin, just like we spoke about. It's all well and good. If you're 33 times leveraged and this stock goes down 3% in a day, you're liquidated, okay? This is the world that we're living in, and I think there's a lot of risk of 3% downside, and that is not a safe or smart thing to be doing. Now, with those other two hurting, it has meant that Samsung's been able to post record revenues for them. There's always someone on the other side of the screen, as we like to say. These are just some thoughts about previous election years, where money's going to flow, stocks or bonds. I think there's going to be a lot of volatility, and we're probably going to see a sharp sell-off as investors reposition themselves. There's people talking about a good time to buy bonds. Look, I'm not so sure. I think that, I hate to say it, things are different this time because of where interest rates are. Do we really need more stimulus? A lot of people are excited about how much Biden's possibly going to spend. But do we need this stimulus? Well, whether or not you think you need it, it's coming. It's just now about the form that it is going to be in. And that it more ties into this crypto news. And Stephanie Kelton got a lot of airtime this week talking about this book that she's got and modern monetary theory. People starting to ask the questions about, why do I pay my taxes if we can just print this money and run these huge deficits? So please check out that commodities video I did. Just so important. If everyone is going to start printing money to no end, why are countries going to sell each other their assets when no currency is backed by anything? Here we see the real yield. So, are you going to go into bonds when they're now at negative 1% in terms of the real yield that they're offering? No, and the negative interest rate, that negative global debt, that's now right back up to where we thought it was. One of the predictions I made at the start of the year is it would get here to this peak and then surpass it. So you got to say to yourself, there's $18 trillion that's looking for a home, and the US dollar is no longer a safe haven. Look at the Bitcoin headlines we're going to get to, but look, this headline a little bit misleading. 2 central banks sold gold, and they were smaller ones, Uzbekistan and Turkey. Russia sold a tiny little bit, but on the whole, guys, central banks are still buying and holding gold. We know investors have got these record flows into ETFs, so that's continuing. At the moment, we've got a little bit of a correction in miners. If we get this another bloodbath and a sell-off, then hey, I'm really looking forward to buying some of these because they're already at really low PEs. That historical commodities versus tech stocks, this is where you want to be starting to plant some seeds and dollar cost averaging in, I believe. GDX and GDXJ compared to these other sectors here, PE ratios and the 10-year average. What can the Hunt brothers tell us about gamma squeezes? So like we spoke about in the tech stocks, those of you that know the story of the Hunt brothers and how they tried to corner the silver market, well, they actually had it in their favor until they started to use leverage, and that's when the big banks kind of were able to squeeze them out, so to speak, but not until the silver price did get squeezed, and silver went to $50 an ounce back in 1980, and that's in 1980 dollar terms before inflation. So that's probably closer to maybe $70 or $80 in real terms now that silver would have to get back to. Jim Rickard, silver could explode within weeks. There's always an article, guys, I think every month where you can find where someone tells you silver is going to explode. But I think that silver is hard to value and probably been undervalued because it lost that monetary premium. Whereas now that there's nowhere left to turn, the US dollar is no longer the cleanest dirty shirt in the laundry. If these trillions of dollars point towards gold, it's only got to be a tiny fraction that points towards silver for it to have those enormous gains. I've spoken about this at length. I've done videos about how to play this. You can use eToro, that ETF trade that I spoke about we did last time. Hey, I'll be looking to set that one up again. We doubled our physical holdings of silver by doing that. GDXJ, I'll be watching the miners. We're still running that promotion as well. We can that $100 free Bitcoin if you are interested in trading any of those assets, and they're continuing to add to those on the eToro app as well. All right, so into the crypto news. This is a sneak peek of our Spotlight platform. Oh, sorry, guys. So this is the library that we want to build out. If you're a paying member, these are the different tiers of information that you can get. So head over there and check it all out if you haven't already. The link is down below. But it's Bitcoin's 12th birthday since the white paper came out. So fitting way to actually hit $14,000 on Bitcoin's 12th birthday. I do want to raise this though. There's been so many people being scammed and they're pretty convincing. So for those that don't know, Ledger got targeted and there's been heaps of hacks of personal details lately. So some people have been getting SMS messages, emails, even phone calls from people, and they've got all your details, so they can really structure it to seem realistic. And I'm sure some of you watching this video have unfortunately clicked on things. And if I have to say this a million times, I'll keep saying it. Never share your backup phrase, your seed phrase, keywords, password, whatever you want to call it. You should never be typing that in. You should never be saying it to someone on the phone, putting it in an email, storing it in your Google Drive or something online. Never, ever, ever. As soon as that is anywhere other than just on your ledger, just in your head or in a paper wallet in your safe, okay, as soon as it's online, you might as well give your crypto away because that is what you're doing. Please, guys, be aware of that. This was pretty cool news, an Australian first and a world first. We've got an IPO on the stock market that will accept Tether. They got the all clear for all stable coins, I believe, technically, but this was a aquaculture company in Malaysia and accepting crypto assets in Australia. So is that going to be a bit of a trend, a bit of an official, I guess, IPO, ICO? I mentioned this last week, I believe. I did just want to mention it again. They're blaming COVID now, but the ASX won't make that move over to blockchain for our stock market until 2023. Huawei, now they've got those chips, but their phones are also going to include a hardware wallet for the digital yuan. Now, they're saying that this is going to work with WeChat and Alipay, which is a game changer if it does. All powerful, the People's Bank of China and the Chinese Communist Party. But Alibaba founder Jack Ma is saying that digital currencies are the future in this speech that he did. So this is pretty significant. How many big names have got behind crypto this week? And the write-up I did for members a year ago, where I predicted that China would be first and they would do this to get rid of US dominance and dollarization. It's exactly what is happening now. And they're rushing and they're saying that they want to ban anyone else that's got a digital yuan stablecoin. And they want to try and get this used globally. They want to try and become a world reserve currency of sorts or get more power. The more people they can get to use that, the more data they can collect on everyone. And this is why the Bank of Canada is calling for a globally coordinated effort to launch these, because these Western countries are now behind and they're scrambling to try and be relevant. Even the Bank of International Settlements is now planning to try and start a central bank coin of some sorts this year. Russia's Gazprom Bank gets the green light to custody their arm in Switzerland. That's the third largest bank in Russia. Sorry, guys. I said that was the largest when I tweeted that. My apologies. We've got Mongolia's largest bank to offer crypto services. India's bank to offer crypto services, 34 branches. Fidelity expanding their crypto arm into Asia. Thailand getting into DeFi. Cambodia's central bank launching a blockchain-based payment system. Singapore's largest bank launching custody and trading for crypto. This has been an unbelievable week. JP Morgan coin. I joked about it for ages that, Ripple and XRP are going to have a hard time because Jamie Dimon's going to launch JP coin. It's literally come true. I just can't believe my eyes and what is happening around the world at the moment. Ethereum developer Consensus are going to help a French bank trial their central bank coin. Avanti is the second crypto-friendly bank in the US to get this banking charter. So this is a lot of hard work from Caitlin Long, who's a bit of a legend in the crypto space. The sole purpose of this bank is trying to combine the digital crypto world with traditional banking in the US. We've got a former regulator joining Andreessen Horowitz. So if you don't know those guys, they're a big player. And to have a regulator of the world's largest stock exchange, they want to do everything by the book to make crypto more legitimate. Japan is the leading candidate for Ripple's new headquarters. So a bit of a surprise that after all these years, Ripple have decided that the regulations aren't working for them or whatever reason. They've been continuing to pump this money into MoneyGram. Was it $9 million over this Q3 period? So I'd love to know where this is going. Is it building liquidity? Is it being used at all? If it's just being sold on the market, then I really want to know that, and I think investors would be angry, and it would explain why price is underperforming compared to a lot of other top 10 assets. Binance have denied these allegations that they're trying to, skirt regulations. I think they've been on the run for a long time, but hey, maybe these leaked documents are going to reveal something if the FBI do come after them. That's why they're trying to go more DeFi like a lot of these exchanges are. It was very cool this week to see Celsius tap into Horizon for this proof of reserves concept. This shows you that they're solvent. So you guys know that I think there's a lot of red flags around crypto.com. I don't think you'll be seeing them do this anytime soon. But more so these other ones that get hacked or have fractional reserves, dodgy exchanges. We want everyone having the proof of reserves. Speaking of regulations, FTX have launched fractionalized stock trading. So this is crypto stock trading. And some people said, how on earth are they going to do this? That the SEC are going to come after them. Guys, this is all fully regulated. It's done with a European broker that they've partnered up with. So it's all by the book. So don't think there's anything dodgy there. What I am excited about, those of you that will remember how I've traded gold a few times, and there's a big edge we can get from trading crypto assets 24/7 compared to the markets that only trade those opening hours. So there's going to be an arbitrage trade setting up that I'm very excited about. It's almost a guaranteed profit, and I'll do a write-up for members very shortly about how that's going to work. Now, some people were complaining about SAM and FTX, and look, I don't like some of the stuff that they're doing. I don't know how malice their intent is to borrow all this Wi-Fi, short it into the ground because they want to buy it up, because I think they believe it's a good project. And sure enough, that's what turned out to be the case. They're now one of the largest holders of Wi-Fi. Remember, there's only 30,000 coins, and they now own nearly 2,000 of them. And a lot of people, as I said, a little bit upset. Is this legal? Is it street legal? Is it, in crypto, anything goes? I do think that Wi-Fi is going to be allowed to run if they're happy with how many coins they've got in their bags now as well. Okay, I am going to push on. This is what I want to show you. Okay, so this is an example of a lender that's, I think, had something go wrong in terms of being ripped off through fraud, and now they've had to ban all their inflows and outflows, and proof of reserves would be very handy in this instance to see what has actually happened. Harvest Finance, another one that got hacked this week. Avanti, transfer governance tokens to token holders. This is what we want to see in terms of holding the rights and giving the governance and the power back to the holders of the platform. We want all DeFi projects to eventually go down that route of being community owned if they can. It's what Uniswap is doing. They've now passed $3 billion in assets. How crazy is that when you consider they were at $300 million in August, so tenfold. Uniswap are talking about doing another 5 million airdrop, which I'm very excited about. You guys know, as an active user with multiple addresses, people got very lucky. They're talking about doing another round of airdrops for people that have used My Ether Wallet. I'm sure that's heaps of you. Argent, yes. Dharma, yes, I've spoken about. DeFi Saver, I've spoken about. Nuo, Edu, Open, Fu Combo and Rebalance are two that I haven't, that I'm actually not sure what they are, so I'll check those out. But if they're going to backdate and do another airdrop, hopefully a few of you guys have used all of these, and you're going to get another big lot of Uni tokens, which is great news. dHedge have got their mainnet live, so this is another great place where you can now go. This is leveraging the Synthetix technology to build these different platforms sort of portfolios, a mix of the tokens and assets that are offered on Synthetix, almost like a decentralized hedge fund where you can mirror and copy other traders as well. So pretty new. There's not a lot of assets that I'd like to sink my teeth into. If they add all ERC20 tokens, then I'll be very keen to knock up some model portfolios there. XDAI, they've been killing it lately. 100,000 transactions a day. We seem to have more and more projects that are looking to build on them as a scaling sidechain solution. Ethereum Classic is building a bridge back to Ethereum for DeFi. Struggling to stay relevant, but they're still there, so power to them. Expanding beyond just Ethereum is our 0x protocol. So this is their core thesis. They've always spoken about being this liquidity provider and a DEX hub, a mesh that ties all these different protocols together, which is great. And we are seeing a lot of projects now use other blockchains or protocols almost as a second layer. So Audius is an example here, launching a decentralized Spotify, and they chose to build on Solana, which is that FTX protocol, which is actually a layer 1 chain, but people are thinking of it as a layer 2 to Ethereum because it's helping complement what they want to do. Andre's new project, Keeper token, surges 2,000% in hours. So I think this did 100x in a day, which is unheard of. Anyway, well done to anyone that got some of that. Another project which is trying to put the power in the hands of the users, a peer-to-peer, the gig style economy, a marketplace for technical jobs. I just love these ideas that he comes up with. Ocean have launched their version 3. This is all about data monetization and tools for Ethereum. Very much playing into my Web 3.0 thesis. The Graph successfully did their raise. They only raised 12 million from the token sale, but I spoke about in previous videos how they weren't selling a lot to the public. A lot of the tokens are already private sale, team. I wasn't a fan of that distribution, to be honest, but nonetheless, a very, very solid project. Figment have raised $2.5 million to fund more of these Web3 projects. I just love when these themes play out and the VC money is going there. That's how you get 10x, 100x returns. Not from retail, pump and dumps and YouTubers shilling. You get it from getting early in a good project by doing research, and then the VC funds come in with their hundreds of millions of dollars, and that rises your investments, and that's definitely what you want. Andreas Wandersteed here brings his oddly satisfying 3D art to Maker's Place. So a lot of the creative, whether it's the audio guys or these artists, are coming into the world of NFTs and being introduced to crypto, and the more the merrier. If you haven't seen some of this artwork, it is really cool, really different, pretty trippy stuff. So check that out. Axie Infinity are launching their token, their governance token. So don't buy their special love potion. That is the in-game currency. That is not the investment governance platform token. That's going to be on Binance in a couple of days. I'm hoping to interview the team and get that out to you before then to ask them some questions. But you guys know this is a project that I've been harping on about because I think it's been so unloved that it deserves more attention. And this week, a couple of 1-2 punches. So RedFOX Labs have launched their new website. Very sleek. It's looking good. We've got the new, what they call their litepaper. So this is the paper that's focused on all the games and what they're going to be doing there with the next round of their NFTs and the actual games that they are launching as well. They've finally launched a liquidity pool. So everyone that's been hesitant to sign up, or if you're on the US, in the US and you couldn't use the liquid exchange, if you just love DeFi and DEXs, if you're not familiar with how to use them, I've got that super tutorial for you. But they've got those pools now for you to use RFOX Ethereum or RFOX USDC. And for the liquidity providers, if you can get in there, there's the rewards, the liquidity token rewards like usual, but they're also giving away some NFT starter packs, COGS. So a lot of incentives there to put your tokens to work and get a bit of a yield. Now, I want to mention some people were worried that this one had done a full retrace. If you look at the charts this is on a different website. You won't find them on TradingView yet. This is on charts.cointrader.pro. But this data doesn't take into account the 10-for-1 token split. So I wanted to just show you that this is what the chart should look like. It's gone up 6,000% and it's pulled back 35%, guys. So, there's been some big sales, some early investors, early miners, I believe, some profit taking from guys that are sitting on big gains. But I was sort of saying to the team that don't stress, this is all healthy market action. You got guys here that were begging for a pullback. You got guys that need to take profits or want to get out. And this is where the coins are all changing hands. So this is healthy market action that you want to see in a project to get dispersed ownership. So speaking of going to the moon, we've got an Ethereum-based blockchain satellite set for orbit. You've probably all heard about the Blockstream Bitcoin satellite, but let's get some Ethereum ones up there as well so that the Ethereum network becomes unstoppable. DeFi consensus forming these ZK rollups for Ethereum scaling. Everyone's settled on this as the main solution, these optimistic rollups for the time being. It's the closest thing that we've got. We do have another big upgrade coming. So this is a hard fork for the current Ethereum chain that's due in January. I hope we can finally integrate Ethereum EIP 1559, but I don't think that's a given yet. I do hope they include that one that's going to implement the fee burning. QuadStamp have given it the all clear. They're the auditors for all the smart contracts. A few people are worried that all these high yields in DeFi are going to threaten the attractiveness of staking your Ethereum. But I think you've got to realize that it's a capital asset as well. It's not just a yield. There's a lot of altcoins or shitcoins, whatever you want to call them, that are going to have a better yield, but people want to hold a premium blue chip asset. So I wouldn't be too worried about that. And in this chart that I've shown, once we start burning all the fees, Ethereum's stock to flow is going to be off the chart, higher than real estate, gold, or Bitcoin. So that in itself is going to make it more valuable. And people are starting to understand this. Professional firms like KPMG are getting this data out there to the institutions. I mean, how exciting is that? And it's making them confident to invest. Bitcoin is this financial black hole. It's just sucking in anything of value. We saw the CEO of MicroStrategy again this week talk about, well, even if you've got a stock that's paying a 7% dividend, if the Fed are printing 22% more money, it's a bit like owning an altcoin that's paying you a 7% yield and reward for staking, but they're creating 22% more coins each year. So you're still 15% worse off. And what he's saying is that just Raul is on this theme as well. Comparatively, no matter what way you look at it, Bitcoin is a better investment than just about anything. And that is very powerful if people with millions and billions of dollars start to come to that conclusion, which is what we're seeing. Now, this is the cover of Wall Street Journal. Cash is trash. MicroStrategy are thinking about buying more Bitcoin, I heard this week, and that's when their CEO already owns more than this himself personally as well. These are enormous numbers. In the mainstream this week, Kevin Hart gave Bitcoin a shout out. Kanye is talking about it on Joe Rogan. We've got, sure enough, there's still one or two guys that are poo-pooing it. MasterCard's CEO, I mean, who would have thought Bitcoin's too volatile? I think we're kind of, past that now. The battle for this hash rate with all the big miners, this is becoming geopolitical. Like I said, mining and hash power wants to go to America and other places away from China. And we are seeing a bit of a pullback this week, which we discussed in detail in our monthly mining update. The last couple of metrics I want to show you. So this is the on-chain data. Realized market cap has reached a new record high. This is the last price when all the coins are moved. So it gives people a chance to realize the value of their coins. And this is compared to, 11 back here. Very, very powerful stuff. And it's saying that people are happy with this price. They see it as fair. Bitcoin does have a couple of upgrades coming. The Taproot, we need to decide whether or not we're going to do that. It's a soft fork. It's not a hard fork. But how are we going to signal for that is going to be a hotly debated topic going forward. Active addresses on Bitcoin has fallen off a little bit. So this is a bit of a divergence with price going up, but active addresses going down. These are the sort of things we talk about in our sentiment research reports. So head over to the platform. Under research reports, click that. You will find all these different reports like the sentiment one there as well. Let's have a quick look at the price charts though. So that all important 14,000 level, it got touched this morning at time of recording. And we've pulled back since a little bit. Now, I think on the monthly, everyone was waiting to see if we could have that highest ever monthly close. And in typical Bitcoin fashion, on some exchanges we got there by $1, and on some exchanges it was slightly under there by $1. But either way, I think in the grand scheme of things, that doesn't really matter now. If those billions and trillions of dollars that were going to go in those negative yielding bonds or the company balance sheets, if that wave of money comes into Bitcoin, you can kind of forget your technical analysis a little bit. Big picture, we broke out, we came back, we retested. Hey, I'm happy for us to go off to the races here. If stock markets pull back a little bit, then I would expect Bitcoin to pull back. This was a big bloody red week for world stock markets. A lot of the tech stocks that Bitcoin even tracks closer got hit. But we did see the correlation break a little bit, which is very exciting to see. But I'm wondering if that was because the market was so focused on the monthly close, on 14,000, on all the good news items. So was it just short term, or can we actually break the shackles? Is Bitcoin going to be powerful enough to do its own thing in the face of a falling hard global market run to the US dollar? Is the US dollar going to strengthen again? Cleanest dirty shirt in the laundry? All those things are bad for Bitcoin, gold, all those assets. So guys, there is plenty to watch at the moment. I'm going to be doing the write-ups every morning. You will get those here, nuggets, daily posts, multiple updates as all the news rolls in. I hope you've enjoyed that. Head over to the new platform, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.